Welcome back to AI Research. Today we are breaking down the latest economic data from the U.S. Bureau of Economic Analysis to understand why your wallet might be feeling a bit lighter lately. We are looking at a crucial chart that tracks the quarter-to-quarter percent change in three major price indices from mid-2024 through the third quarter of 2025. This data gives us a front-row seat to the roller coaster of inflation we've been living through. The three key metrics. To understand the movements, we first have to identify our three players. Gross Domestic Purchases Price Index, dark blue. This measures the prices of everything U.S. residents buy, including imports. PCE Price Index, solid gray. This is the Federal Reserve's favorite headline inflation metric. Core PCE, dashed orange. This excludes volatile food and energy costs to show us the underlying trend. Analyzing the ups and downs. The chart shows a significant V-shaped recovery in price increases starting in late 2024, peaking in early 2025, and then spiking again in the most recent quarter. Here's why those shifts happened. 1. The 2024 dip, Q3 2024. The low point seen in late 2024 was the result of the Federal Reserve's previous interest rate hikes finally cooling the labor market. Combined with a temporary drop in global oil prices, headline inflation, gray line, fell significantly, even while core prices, orange, stayed a bit higher. 2. The front-loading surge, Q1 2025. At the start of 2025, we see a massive spike. This was driven by tariff anticipation. Businesses expected new trade costs and rushed to import goods like electronics and car parts all at once. This sudden surge in demand for shipping and inventory drove prices up across the board before the policies even took effect. 3. The mid-2025 correction and the Q3 spike. We saw a brief dip in Q2 2025 because retailers had too much inventory from that earlier rush and had to offer discounts. However, as we look at Q3 2025, prices are climbing again. The Gross Domestic Purchases Index has hit a peak of approximately 3.4%. This is being driven by tariff pass-through. Higher costs for imported furniture and apparel are finally hitting the consumer. Government spending. Increased federal defense and infrastructure spending is pushing the blue line higher than the consumer-only indices. Sticky services. While goods prices fluctuate, the cost of services like healthcare and airfare continues to climb steadily. The bottom line. The data shows that while we had a brief cool down in 2024, inflation in 2025 has become sticky and volatile. The divergence in the final quarter indicates that even if consumer goods stabilize, government and industrial costs are still pushing the overall price of the U.S. economy upward. Alright, this is the AI Research. If you find any value in this, subscribe for more. See you in the next video.